Have you ever felt like the market is messing with you on purpose? Like every time you buy, it's as if someone saw your entry and reversed the trend instantly. You might think you lack skill. You might blame your system, your psychology, or even the market itself. But the truth is, you've been looking in the wrong place. You're staring at price, the surface of the market. But price is only the ripple. Beneath it, there's a hidden current. And that's where the real money moves. Big funds, institutions, whales, they don't shout when they're buying. They don't light up indicators. They move quietly, in silence, like sharks under the water. And they leave behind no news, only footprints, subtle imprints that most traders never see, unless you know exactly where to look. They use something called Anchored VWAP, not a magic tool, but a compass built on truth. Price, volume, and time, the only three variables that can't lie. While retail traders keep chasing moving averages and flashing signals, institutions are anchoring their decisions to specific events. Earnings, breakdowns, shakeouts, red candles that scare the weak hands out of the game. And from those moments, they start measuring who's in control, buyers or sellers, and whether the trend has memory. Anchored VWAP is not predictive, it's not emotional. It reflects what has already happened, with actual money. That's why it works. That's why it never lies. And in this video, I'm not here to show you how to add another indicator to your chart. I'm here to show you how to see the market for what it really is, a living, breathing organism with memory, structure, and behavior. Because once you understand how the current flows beneath the surface, you'll never fall for fake breakouts again. You'll never be trapped above resistance, and you'll never chase momentum that doesn't belong to you. This is your invitation to stop reacting and start observing, to stop drowning in noise and start navigating by flow. Welcome to the hidden current. Let's go beneath the surface. Welcome to Trading Psychology Stick, where we decode the mental game behind profitable trading. Before we dive deep, remember that everything I share comes from years of market observation and is for educational purposes. Trading involves risk, and past patterns don't guarantee future results. What you're about to learn isn't financial advice, it's a new lens for seeing market behavior. Use it wisely, trade responsibly, and always manage your risk. Now, let's begin your transformation. Section 1. Price isn't truth, flow is. If price were the truth, every chart would be a mirror of logic. But it's not. Price is only what's left behind, the echo of decisions already made. It's the outer skin of something deeper, invisible to most. The truth lives in the flow, and flow is built from three things: price, volume, and time. Together, they form a current, not just movement, but intention. And hidden within that current is the only question that matters. Who is in control, the buyers or the sellers? Imagine standing on a cliff, overlooking a wide river. The surface looks calm, a few ripples here and there, but deep under the water, the current is rushing strong, pulling everything in its path. Now, imagine trying to sail by, looking only at the ripples. That's what most traders do. They see price go up, they buy, it dips, they panic. They never see the force underneath, the force that was pulling it long before the candles turned. Anchored VWAP is your sonar. It tells you where volume actually moved in, not just where price passed through, but where money committed. That's the difference. Price touches every level, but Anchored VWAP reveals where buyers meant it. Take the example of a breakout. You see a clean resistance line, price crosses it, Twitter lights up. Everyone screams, breakout confirmed. You buy, it reverses, you lose, again. But if you had plotted the AVWAP from the last earnings gap, the real point of institutional interest, you would have seen that price never truly broke through the zone where real money anchored. That fakeout wasn't random, it was structural, it was built into the flow. The price lied, but the flow told the truth. Trading isn't about finding magic indicators, it's about learning how to see where the crowd gave up and where the predators moved in. What the market says out loud is noisy, what it remembers is what matters. Anchored VWAP, when placed at the right moment, turns a chaotic chart into a battlefield map. You stop seeing squiggly lines, you start seeing footprints. So, let me ask you this. When was the last time you anchored your perspective? Are you reacting to price or are you reading intention? Because the game doesn't reward followers, it rewards those who understand flow. And if this resonates with you, if you're starting to see how memory shapes movement, then you're ready for what comes next. In the following section, we'll dive deeper into those moments when flow doesn't just exist. It squeezes, constricts, and prepares to explode. Section 2, the pinch when the current coils to strike. There are moments in the market where everything goes silent. Price stalls, volume dries up. It looks boring, harmless. But beneath that stillness, pressure builds. Like tectonic plates locked beneath the earth, a violent release is only a matter of time. Traders call it consolidation, but those who understand the current, they see it for what it really is, the pinch. The pinch is when price gets trapped between two opposing AVWAPs, one descending from above, the memory of sellers, and one rising from below, the conviction of buyers. When those forces converge, price has no space left. It's cornered, and that's when the current either bursts through or collapses. Think of it like a river narrowing between two cliffs. The water has to go somewhere. If the rocks compress it long enough, it explodes outward, faster, louder, more dangerous. That's the AVWAP pinch. It's not a pattern, it's physics. Volume meets memory, commitment meets resistance. Back in 2022, there was a stock you might remember, ticker NVDA. After a sharp earnings drop, the stock found footing. For weeks, it danced in a tight zone. The daily AVWAP from that panic day curved downward, pressing like a ceiling. At the same time, a new set of buyers had begun to step in, anchoring their belief to the most recent swing low. Their AVWAP climbed upward, quietly. For 2 weeks, price got squeezed in between. Most traders lost interest. Sideways, they called it. Choppy. But one morning, volume surged. The candle sliced through both anchored lines. The breakout was real, not because of the candle, but because both sides had already committed. The tension had snapped. That's the beauty of the pinch. It's not a breakout you chase. It's a decision you anticipate. When AVWAPs compress, you're not looking at lines. You're looking at opposing ideologies, fear versus conviction, memory versus momentum, and you're not trying to predict, you're listening. The market doesn't move from randomness. It moves from imbalance. AVWAP helps you locate where balance is holding and where it's about to break. And if you want to trade like a predator, not prey, you wait for that moment, that build-up, that silent tension. Have you ever watched a stock go sideways and walked away, only to return hours later to see a massive move just triggered? Next time, don't walk away. Anchor your vision. Plot the VWAPs. Watch them narrow. And when the space between them gets tight enough to suffocate, be ready. Because the current doesn't always show when it's flowing. Sometimes it holds its breath. And when it exhales, that's when you strike. Speaking of strikes, in the next section, we'll explore how institutions intentionally create these moments and pass the torch between each other without the crowd ever noticing. Section 3, the handoff, how smart money transfers power in silence. Imagine two swimmers in a relay race. One finishes their leg, reaches out, and without a single word, hands the baton to the next. No crowd sees the moment. No commentator announces it. But everything changes because the power to move forward has just been passed. In the market, this moment is called the handoff. And it doesn't happen on the news. It doesn't show up in headlines. It happens quietly through Anchored VWAP. Smart money doesn't exit all at once. They don't dump their shares like retail traders in a panic. They hand off. They disguise their exits as consolidations, pullbacks, minor pauses. And while the retail crowd thinks nothing is happening, someone else, often just as powerful, is stepping in. You can't see it on price alone, but if you anchor VWAP to key events, you'll notice something extraordinary. One AVWAP flattens or declines, while another one slowly begins to rise. This transition is subtle, but it's everything. Take Apple in 2020. After a strong rally, it entered a range. The original AVWAP from the breakout point began to flatten. Volume tapered. Most thought it was the end of the trend. But behind the scenes, funds were rotating. The big buyers who rode the wave were handing off to a new wave, longer-term holders. How do we know? Because when you anchored the VWAP from the prior high and compared it to the one starting from the consolidation base, something rare appeared. They crossed like baton hands in a relay. The declining VWAP told you the first wave was done. The rising new anchor revealed the new driver. The story was changing, not by price, but by flow. Volume by itself is just noise. But anchored volume, volume tied to a meaningful event in time, that's memory, that's commitment. That's where the handoff happens. You'll start to notice this pattern, a strong trend, followed by a VWAP from the top that begins to decline. Then, a base forms. A new anchor, placed at the bottom of the pullback, starts to rise. Slowly, the two lines dance, sometimes kissing, sometimes bouncing apart. And then, with no warning, price accelerates again. It's not the same buyers, it's the new ones, fully loaded, taking control. The power has shifted. Are you still chasing momentum, or are you positioning with the next wave of control? Because the traders who thrive aren't just reactive, they're relational. They don't just see price, they see transitions. They see flow handing off power, and they step in where others hesitate. And while most handoffs are hidden, there's one place where they become brutally obvious. After panic. That's where we're headed next. Section 4. The blood pool when fear makes smart money hungry. Every trader remembers their first panic. The flush, the red candles, the disbelief. It feels like the floor just vanished beneath your feet. And in that moment, logic disappears. Charts don't matter. News is irrelevant. There's only one instinct left: run. But while the crowd is running, someone else is feeding. Welcome to the blood pool, the zone of maximum fear and maximum opportunity. This is where smart money sharpens its teeth. They've waited. They've watched. And now that the crowd is bleeding, they move in, not emotionally, but strategically. And how do they know where to act? Anchored VWAP. In panic moments, price doesn't just fall, it shatters memory. It breaks every support retail traders believed in. But professionals don't see support the same way. They anchor to the panic candle itself, the exact moment when the crowd capitulated. That's when real accumulation begins. Picture it, a massive gap down on terrible earnings, a sea of red. Volume explodes. Everyone screams, sell everything. But a day later, price stabilizes. Then it bounces, slowly, almost awkwardly. Retail traders assume it's a dead cat. But if you anchor the VWAP to the low of that panic day, something magical happens. Price respects it like gravity. It dips close and bounces. It tests it and holds. Why? Because those who bought at that panic low weren't guessing. They were waiting. They wanted liquidity. And panic is the only time the crowd is generous enough to give it. March 2020's COVID crash, global chaos, the S&P tanks. Everyone is terrified. But if you anchored VWAP from the exact low of that event, that moment of absolute despair, something profound happens. Months later, as the market begins to recover, every pullback finds its footing near that anchored level. Why? Because that's where the big bets were placed. That's where money committed while everyone else ran away. That is the blood pool, and those who dare to step in during maximum pain often ride the biggest waves after. AVWAP isn't just a tool, it's a mirror of human emotion, frozen in time. Anchoring to a panic candle is like marking the graveyard, and then watching which ghosts come back to life. Once you know where fear climaxed, you can track the healing. You'll see volume return, structure rebuild, conviction form. That's when a dead cat becomes a true reversal. So next time you feel panic, remember this. Don't look away. Anchor. Ask yourself, where did the world give up and who stepped in? Because that spot, that precise moment, is where future trends are born. And speaking of future trends, in the next section, we'll dive into the psychology behind those recoveries and reveal exactly when the masses regain belief and when smart money begins their silent exit. Section 5, the confidence curve, when belief returns and profits disappear. The market has a strange relationship with confidence. At first, it punishes those who dare to believe. Then, when the pain reaches its peak and courage is most scarce, it rewards the few who act. But as belief returns, it begins to punish again. Not with losses at first, but with a trap, late conviction. And if you know how to read the anchored VWAP, you'll see that confidence has a curve, and profit doesn't live at the top. After a panic, price stabilizes. It forms a base. Smart money anchors VWAP to the low, watching how it behaves. Slowly, it begins to rise. Pullbacks get shallower, volume increases, not euphoric, but focused. The crowd stays cautious, still traumatized. This is where the professionals are building. But then, price breaks out, and belief floods in. Suddenly, everyone is confident again. Social media lights up. Indicators turn bullish. Price accelerates. Candles stack green. And here's where most retail traders enter, right at the peak of the confidence curve. But if you anchor your VWAP to the panic low, you'll notice something uncomfortable. the further price stretches above that VWAP, the more unstable the move becomes. Not because price is too high, but because ownership has changed. The early buyers are now sitting on profit, the late ones on hope. This is where distribution begins, quietly, without warning. Think of it like a bonfire. The smart money lit the fire in the dark when no one believed. They tended the flames, they gathered wood while others froze. But now that the fire is big and warm, everyone shows up. They circle around, they bring marshmallows. But the original builders, they're leaving, quietly, one log at a time. You don't notice at first because the fire still looks strong. Let's look at Tesla in late 2020. After its post-COVID surge, price stretched far above every AVWAP from prior bases. Yet, the higher it climbed, the more volatile it became. Each dip was sharper, volume got erratic. If you anchored VWAP to the March 2020 low, you'd see that price was now miles above the true cost basis of smart money. And the drop came, not suddenly, but predictably. Because AVWAP isn't a timing tool, it's a pressure gauge. The more price expands above it, the more risk you're carrying and the more profit smart money is sitting on. Confidence doesn't equal opportunity. Often it signals exit. So how do you protect yourself? You anchor, you measure, you watch the stretch, not with fear, but with clarity. And when the crowd finally agrees with you, pause, because that may be your signal to scale out, not load in. Have you ever bought just when everything finally looked safe, only to be crushed days later? It's not bad luck, it's the confidence curve, and now you see it. But seeing one curve isn't enough. Real structure isn't built on a single anchor. It's an ecosystem of memory. Let me show you how multiple flows create the map that elite traders navigate by. Section 6. Layered memory. When multiple flows collide, the market doesn't move in clean lines. It moves in memory, not just one, but many, layered like ancient sediment beneath a riverbed. Each anchored VWAP is a snapshot of intent, a frozen moment of collective emotion, fear, greed, conviction, regret. And when you start layering these anchors, you stop seeing price as random and begin to see it as architecture. This is the secret few traders realize. Price structure is memory structure. One AVWAP shows you where one group acted, but multiple AVWAPs, layered across key inflection points, that reveals where entire generations of traders are buried or still breathing. Imagine a tech stock post, IPO. It launches with a bang. You anchor VWAP to the IPO day. That's your first memory. Then comes the lockup expiration, sell-off, panic. You anchor again. Then a secondary offering, another anchor. Each event left a psychological scar, a mark of behavior. And when price begins to move months later, it doesn't move freely. It bounces between layers of past commitment. AVWAP layering turns your chart into a topographical map of belief. One VWAP alone might seem bullish, trending upward. But layer in another from a secondary high, and suddenly you see resistance forming. Add one more from a capitulation event, and you find hidden support no one else is watching. It's like peeling back market psychology in 3D. In 2021, a small-cap biotech stock made headlines with a sudden FDA approval. It spiked, then crashed days later. Retail got washed, but smart money waited. Over the next 6 months, 3 critical AVWAPs emerged: the IPO base, the approval day high, and the post-crash capitulation low. When price slowly returned to test those zones, it paused every time at those layered memories. And when it finally broke through all 3, the move was explosive and clean. Why? Because memory had been tested and cleared. AVWAP layering exposes invisible confluence, not moving averages, not Fibonacci, but psychological gravity points that still pull price even after the headlines are gone. Ever wonder why price just stops at certain levels even without visible support? It's because someone, somewhere, anchored there, and their memory still matters. Are you trading price or are you trading memory? Most traders look for confirmation in indicators, but the elite look for agreement between memories. When 2 or 3 AVWAPs converge, you've got more than a level, you've got a fortress. And speaking of fortresses, sometimes smart money doesn't just defend them, they use them as bait. In the next section, we'll explore the most cunning use of layered memory, the trap zone, where hope becomes fuel for the hunt. Section 7, the trap zone, where hope becomes fuel for the hunt. They say hope is not a strategy, but in the market it is, just not for you. it's a strategy used against you. And no weapon is sharper than the trap zone, where smart money uses price memory and anchored VWAPs to lure retail traders into making the worst decisions at the worst times. After a deep drop, price begins to recover. Slowly, cautiously, it forms a recognizable pattern, a breakout, a flag, a double bottom. Traders get excited, volume picks up, social sentiment shifts. It feels like a reversal. But what's actually happening? Smart money is engineering a zone where previous anchored VWAPs intersect, often from the prior highs, breakdown points, or failed rallies. And that intersection becomes a wall. Price runs directly into it, pauses, maybe even pushes slightly above, just enough to trigger breakouts and stop orders. Then, like clockwork, it collapses. This is not a failed breakout. This is a precision-engineered trap. And here's what makes it lethal. Anchored VWAPs are objective. They don't repaint. They don't lie. If you had been tracking the AVWAP from the last significant high, you would have seen the trap forming. You would have noticed price rising into the same memory zone that caused the collapse. And if you layered in an AVWAP from the capitulation low, you'd see how the two converge to form a zone of maximum vulnerability. In early 2022, after a brutal tech sell-off, many stocks began to rebound. Traders rushed in, convinced the bottom was in. But price ran into the anchored VWAPs from the previous highs and distribution zones. Look at PayPal. It rallied into a clean downtrend VWAP and got rejected violently, wiping out weeks of gains in a single day. Retail blamed the news, but the truth was written in the anchored levels all along. Smart money used memory as a weapon. They know most traders forget. They act on patterns, not history, but history leaves footprints. And anchored VWAP is the ink. Trap zones are not about manipulation. They're about memory convergence. When two or more AVWAPs align, they form a psychological barrier. The crowd doesn't see it, but the pros build around it. So how do you avoid being the prey? Don't chase breakouts into layered VWAP zones. Pause, anchor, ask, is this momentum or a magnet pulling in fuel for the next move down? Have you ever bought a breakout only to get stopped out within hours? Felt like it faked you out? It didn't. It trapped you, and now you know how. But knowing how to avoid traps is only half the battle. The real mastery comes when you learn to set your own. That transformation is what we'll explore next. Section 8. Becoming the current from follower to flowmaker. Most traders spend their lives reacting. They wait for setups. They chase momentum. They follow indicators like trailing shadows. But there comes a moment, quiet, often unnoticed, when a trader shifts, when they stop reacting and start shaping. That moment begins when they master anchored VWAP, not just as a tool, but as a language. And that's when they become the current. Becoming the current means you don't wait for confirmation. You are the confirmation. You see the memory layers, the zones of emotion, the exhaustion points. And instead of asking what's happening, you ask where will they react and how can I position before that? This isn't about guessing, it's about grounding yourself in memory structure, real cost basis, real commitment, real regret. That's what AVWAP reveals. You can now identify zones where others will chase, panic, or hesitate, and prepare your entry long before the move. Imagine a stock crashes on earnings. You anchor VWAP to the high before the gap. As price grinds back up weeks later, it approaches that VWAP. Everyone's watching RSI, MACD, news flow. But you see the memory. You know it's a pain zone. That's where trapped holders are waiting to sell, just to break even. Price hesitates, and you short. It taps the level and rolls over. That's not luck. That's current making. Or maybe it's the opposite. A breakout fails, and price begins to fall. You anchor VWAP to the breakdown candle. Weeks later, price dips back into that zone. Volume dries up. Retail assumes it's dead. But you see the test, the smart money retest of the flush zone. You go long quietly. No FOMO, no fear, just flow. AVWAP doesn't give signals. It gives structure, and structure builds conviction. Most traders look for setups. Flow makers look for memory. They anchor. They wait. They act when alignment appears, not from one level, but from the convergence of emotion, commitment, and opportunity. Think of yourself like a deep sea diver. Others ride waves on the surface, whipped around by headlines and hype. But you've learned to drop beneath the chop, into the stillness of the current. You see what others miss. You breathe slower. you act cleaner, and when the tide shifts, you're already positioned with full lungs and calm eyes. You've stopped chasing. You've started shaping. But mastery doesn't stop at seeing memory. It accelerates when you combine memory with geometry. Because in the next section, we'll stitch AVWAP into the very fabric of market structure itself. Section 9. Stitching memory into structure, the invisible geometry of smart money. At first glance, trading seems like chaos. Price zigzags, patterns break, news disrupts. But when you combine Anchored VWAP with structure, real structure, suddenly the noise fades. You begin to see geometry beneath the madness, and what was once a messy chart becomes a map. Most traders look at support and resistance as lines, flat zones, arbitrary numbers. But price doesn't respond to numbers, it responds to memory and flow. When you draw a trend line or identify a supply zone, you're guessing that history will echo. But when you anchor VWAP to those same inflection points, you're no longer guessing, you're confirming, because now you're stitching emotion into structure. Let's say you draw a descending channel, it looks clean, price respects it, but what happens when price breaks out of that channel? That's when the retail crowd floods in. They see the breakout, they act. But if you anchor VWAP to the last rejection within the channel, the moment the crowd last gave up, you can watch how price behaves relative to it after the breakout. If price reclaims that VWAP and holds, it confirms strength. But if it breaks out of the channel, yet stays below the anchored VWAP, that breakout may be structurally broken. VWAP respects gravity. Structure defines the slope. AVWAP defines the mass. In 2018, AMD was coiling in a massive ascending triangle. The retail world drew trend lines. It looked ready to break, but pros were watching something else. They anchored VWAPs to each failed breakout. And when price finally broke out with conviction, it did more than clear a line. It reclaimed all prior AVWAPs from those false starts. That's when smart money piled in, because the structure had memory stitched in. Raw geometry is amateur. Weighted geometry is mastery. Trend lines are nothing without memory. Supply zones are incomplete without context. But when you anchor AVWAP to swing highs, fakeouts, or breakdown points within your zones, suddenly you don't just see where price might go. You understand where others are trapped, committed, or hesitant. Imagine layering AVWAP from the start of a rising wedge, then again from the breakdown candle, then from the first failed recovery. Now your wedge isn't just a shape, it's a story of behavior. And when price revisits that shape, you know exactly which memory it's colliding with. This is the secret edge of the elite. They don't just draw, they weigh. Are your levels alive? Do they pulse with memory, with tension, with real pain and real hope? If not, you're trading on ghosts. But if yes, you're beginning to see the invisible geometry that defines smart money moves. And that geometry becomes even more powerful when you understand how institutions use it to accumulate positions in plain sight. Institutions don't scream when they buy, they whisper. They don't chase breakouts or panic on red candles. They build positions like architects, slow, methodical, almost invisible. And if you want to see what they're doing before it hits the news or the breakout lists, you need to listen to their language of accumulation. Anchored VWAP is that language. Most retail traders think accumulation looks like a clean base, maybe some volume spikes, then boom, breakout. But real accumulation is messy. It's engineered beneath the surface, and it almost always leaves fingerprints in the form of AVWAP compression. Institutions don't buy all at once. They layer in, they anchor, they measure reaction, then they re-anchor. Over time, this creates a compression of multiple AVWAPs from different key events, swing lows, flush candles, earnings gaps. When price keeps coiling within that compression zone, without violating those anchored levels, it's like pressure building inside a submarine, quiet, controlled, dangerous. And then it releases. In 2020, Microsoft was quietly being accumulated during a multi-month sideways range. There was no news, no hype. But if you anchored VWAP to each minor pullback, you'd notice something strange. Price was respecting those levels, retesting them, but never breaking them. AVWAPs were compressing tighter and tighter, forming a spine of stability, while volume subtly shifted from weak hands to strong. Then one day, the release. Clean breakout, smooth volume expansion, and most traders called it a surprise move. But it wasn't. It was a quiet war, already won weeks before by those who read the memory flow. When AVWAPs from multiple pullbacks begin to align and hold, you're not looking at indecision, you're looking at institutional orchestration. This changes everything. You stop buying because it feels right. You start entering when evidence stacks. And you stop fearing drawdowns because you know where memory lives and who's defending it. Institutions build like coral reefs, slowly, layer by layer, beneath the surface. Most can't see it until it's grown massive. But AVWAP lets you dive deep. It shows you where each foundation was laid, where belief hardened, and where real support lives, not just technical, but emotional, financial, strategic. When you see compression, you don't ask, is this going to move? You ask, how much longer will they hide it? Because the moment compression turns into expansion, the game changes. And those who anchored early are already miles ahead. Now that you can spot accumulation in its quiet phase, you need one more skill: staying clear when the market burns. Because volatility isn't your enemy when you have anchored clarity. When the market burns, most traders panic. Candles stretch like lightning bolts. Wicks slicing both ways. Fear spreads like gasoline. Twitter explodes. News anchors scream. And yet, a few remain calm, focused, almost eerily still. These are the traders who use Anchored VWAP, like a firefighter uses thermal vision, seeing clearly through the smoke. Because in high volatility, indicators lag, emotions spike, price becomes noise, but memory holds. Anchored VWAP becomes your emotional compass. In a flash crash, moving averages collapse. RSI oversells. Bollinger Bands explode. But none of those tools were designed for context. They react, not reflect. But when you anchor VWAP to the last major pivot, say, the breakout candle or the last earnings surge, you now have a fixed memory of cost basis. And during the chaos, price will return to those memories like a bird flying home through a storm. During a brutal 2-day market sell-off in 2023 triggered by surprise macro news, Tesla dropped nearly 15% in 36 hours. Panic. But anchored VWAP from the February low, a moment of prior strength, held the fall like a net. Price wicked into it. Buyers appeared like ghosts. And in the hours that followed, while social media screamed collapse, anchored traders saw stability in memory. Tesla rebounded 8% the next day. That's not magic. That's anchored clarity. High volatility doesn't erase memory. It reveals which memories matter most. The trick is knowing where to anchor and where not to. You don't anchor to every candle. You anchor to emotional inflection points, gaps, fake-outs, panic flushes, parabolic tops. Because those are where traders committed, bled, FOMO'd. Anchoring there allows you to watch in real time, whether that memory is defended or destroyed. Say a news headline drops, price gaps down violently. Don't react. Instead, anchor VWAP to the last earnings beat candle. Watch the interaction. If price respects it, buyers are remembering. If it slices through, that memory just died. And the next VWAP becomes your lifeline. When you master this, you stop being the one screaming in panic. You become the one composed in chaos. You trade less, but cleaner. You hold when others dump. You buy when others beg for safety. Because anchored VWAP isn't just a trading tool. It's a psychological framework, a way to think when your mind wants to run. In your worst trades, did you have a memory reference, or were you drifting? From now on, every trade you take must be rooted in anchored memory. But having the tool isn't enough. You need a system, a playbook that turns insight into instinct. Section 12. Building your AVWAP playbook, the blueprint of your edge. Most traders wander. They collect strategies like souvenirs, follow gurus like shadows, and trade like tourists, always reacting, never rooted. But the traders who last, the ones who thrive year after year, they don't trade from memory. They trade from a playbook, a personal system that reflects not just their method, but their mind. Anchored VWAP is the spine of that system. AVWAP isn't a one-size-fits-all signal. It's a framework, a tool that adapts to you, your risk profile, your time frame, your emotional patterns. It doesn't tell you what to do. It tells you where memory is active. What you do with that memory, that becomes your edge. Step 1. Know your identity. Are you a swing trader who thrives on structure? A scalper who craves volatility? A trend follower who needs flow confirmation? Anchored VWAP can flex to fit each, but only if you're honest about who you are. Step 2. Define your anchors. Your playbook should include 3 to 5 core anchors you always monitor. AVWAP from previous highs and lows. AVWAP from earnings or macro events. AVWAP from breakdown or breakout candles. AVWAP from gap zones or failed moves. These become your memory map. Step 3. Assign context. AVWAPs are meaningless without story. Was that swing low a panic flush or a quiet reversal? Was that breakout candle on real volume or just end-of-day noise? Your playbook should teach you to ask before you act. Step 4. Build reactions. What will you do when price touches an anchored VWAP? Fade it, follow it, wait for confirmation? Your edge isn't in seeing the level. It's in what you consistently do at that level. Your rules become reflexes. Your reflexes become protection. Sophia, a part-time swing trader, built her AVWAP playbook over 6 months. She only trades tickers where AVWAP from last earnings and the recent flush low converge within 2%. When price enters that zone, she watches for exhaustion or reversal signs. If she sees one, she sizes in. If not, she walks away. That simple filter turned her 42% win rate into 65%. Not because she became smarter, but because her system filtered the noise. Your playbook must be alive, updated weekly, reviewed monthly, and brutally honest. AVWAP becomes the objective mirror for your subjective chaos. Most trading mistakes aren't from lack of strategy, but from lack of structure under stress. Anchored VWAP gives you that structure. Your playbook turns it into discipline. What would change if, instead of waking up each day wondering, what should I trade, you opened your playbook and already knew the zones, the rules, the setups that matched your psychology? You wouldn't just trade better, you'd feel safer, sharper, stronger. And when you combine that personal system with multi-time frame alignment, your edge doesn't just grow, it compounds. Section 13, Time Fusion Stacking AVWAPs. Across multiple dimensions, most traders see time as linear. Past leads to present leads to future. They lock into a single chart, the 1 hour, the daily, the weekly, and expect it to whisper secrets. But what if the real edge isn't on one chart, but in the overlap? The intersection where memory aligns across time frames. This is what the elite traders call confluence. And Anchored VWAP makes that invisible alignment visible. Each time frame holds a different emotional truth. A 5-minute chart captures impulse. A daily chart reveals conviction. A weekly chart maps institutional memory. When these truths stack, power compounds. When AVWAPs from different time frames converge near the same price, something is brewing, because now multiple tribes, scalpers, swing traders, funds are watching the same gravitational point. Say you're watching a stock that just reclaimed the daily AVWAP from its earnings gap. Nice. Now, zoom out. You anchor VWAP from the all-time high on the weekly, and it lands just above your daily reclaim. Now go intraday, you anchor the 15-minute AVWAP from the most recent flush, and it's also pointing to that same zone. Now you have a cluster. This isn't random, it's time fusion, a rare zone where memory, emotion, and liquidity converge. And when price approaches this zone, you don't need to guess. You prepare, you anticipate, you anchor your psychology. In early 2021, Nvidia was coiling near all-time highs. Retail was unsure, macro was noisy, but smart traders anchored VWAP from 3 points. The March 2020, COVID low on the weekly, the last day failed breakout on the daily, the intraday earnings spike on the 15-minute. All three pointed to the same $580 to $585 zone. Price dipped into that range. Buyers appeared, momentum built, then liftoff. But the move wasn't luck. It was multi-time frame memory alignment. When AVWAPs from multiple dimensions point to the same price, you're standing at the intersection of consensus and conviction. That's where big moves begin. This doesn't just improve entries, it calibrates confidence. When your daily chart looks shaky, but the weekly AVWAP sits firm, you can hold through noise. When intraday charts panic, but the larger memory holds, you don't flinch. That's the difference between fear and flow. Build a simple habit. Weekly AVWAP from long-term inflection. Daily AVWAP from structural turns. Intraday AVWAP from reaction highs and lows. Plot them. Watch them. Wait. When they compress, act. Because in that compression you're seeing time bend. And when time bends, price often explodes. We've covered the mechanics, the psychology, the systems. But there's one final transformation waiting. It's when AVWAP stops being something you use and becomes something you are. At some point in your journey, the charts fade, the indicators blur, and what remains isn't lines or levels. It's intuition sharpened by memory. Anchored VWAP, when truly internalized, stops being a tool you plot and becomes a lens you see through. This is the moment every serious trader reaches if they persist, when VWAP becomes vision. You no longer need a dozen indicators, screaming alerts, or constant news. You've trained your mind to see weight, emotional, financial, structural. You glance at a chart and instantly sense where the ghosts of fear and hope still live, where battle lines are drawn, where belief was buried or reborn. You open a chart and spot a failed breakout 2 weeks ago. You instantly anchor AVWAP there, then to the swing low that followed. You see price bouncing between them, not random. It's friction. You don't trade yet. You observe. Then one day, price reclaims the upper AVWAP, holds, then grinds upward. You don't hesitate. You act, not from hope, but from patterned memory. And you hold with confidence, because you know the lower VWAP is your psychological safety net. Not a line, but a collective memory of pain that is now turned into support. Raj, a former poker player turned trader, once said, "Trading felt like bluffing until I discovered Anchored VWAP. Now it feels like reading tells on a chart. You can see where people are trapped, where they fold, where they double down." And he's right. Anchored VWAP isn't magic. It's a mirror, a way to reflect the market's collective experience back at itself. Every gap, every fake out, every exhaustion candle becomes a clue, a fingerprint. When you stack enough of them, the chart stops being noise. It becomes a story. Tools don't make traders. Perception does. Anchored VWAP is just a flashlight. You must learn where to shine it. This is why we return again and again to anchoring on emotion, not on random highs or lows, but on conviction moments. Capitulation, euphoria, events where the crowd screamed or wept. Because those are the places where memory lives longest and price returns to settle unresolved tension. Once you learn to see it, you can't unsee it. You'll walk differently, think differently. You'll spot setups not because someone tweeted it, but because you felt the weight shift. You trusted the memory. You trusted your map. That's when you stop being a follower and start becoming the market's interpreter. But this journey isn't just about better trades. It's about becoming a better version of the one making them. Section 15. The trader's evolution from signal seeker to memory maker. At the beginning, every trader wants signals, certainty, green arrows, red X's, exact rules that promise success. But over time, through losses, wins, and all the chaos in between, you begin to realize the market isn't a puzzle to solve. It's a mirror, a reflection of fear, greed, belief, and doubt. And the real evolution is not in finding the perfect strategy, but in becoming the kind of person who can listen to memory and lead through chaos. Anchored VWAP, when fully integrated, is the tool that guides you into that transformation. You're no longer chasing trades, you're interpreting behavior. You're no longer relying on other people's confidence, you're anchored in your own process. Because what AVWAP gives you, when used right, is context with courage. Before, you might have seen price falling and panicked. Now, you anchor to the last true flush and ask, are they defending memory or abandoning it? That question alone puts you above 90% of traders reacting without understanding. Before, you chase breakouts on social media hype. Now, you ask, where is the AVWAP from the last failed breakout? Are we reclaiming or retesting weakness? That insight saves you from becoming exit liquidity. Before, you measured trades by profit. Now, you measure them by alignment with your process. You lose with clarity, win with detachment, and build consistency from memory. Consistency isn't built from perfect entries. It's built from knowing why you entered, where you're wrong, and what the memory of the market is saying. Anchored VWAP makes that visible. But beyond charts, this tool rewires your identity. It makes you calm when others flinch, curious when others cling, strategic when others scream. Because it replaces opinion with observation, reaction with reflection, and surface noise with deep structure. You become someone who doesn't just place trades, you place meaning. Trading with Anchored VWAP is like navigating the ocean with sonar. You don't sail blindly anymore. You sense the depth beneath you, where wreckage hides, where treasure lies, where creatures move in silence. You don't need to see everything, you only need to feel what matters. That's the edge. So, now go build your memory maps, trust the anchors, and step forward, not as a signal seeker, but as a memory maker. Because you're not here to follow trades, you're here to make history. Lock in the memory, trade with mastery. You've just unlocked 15 of the most transformational insights around Anchored VWAP, not as a technical tool, but as a psychological framework, an emotional compass, and a new way of seeing the market. This wasn't just about chart setups. This was about anchoring your mind, not just your trades. And if you've made it this far, you're not just another viewer, you're a trader committed to mastery. You've learned how price is shaped by memory, not noise. You've seen how anchoring to key emotional events transforms your clarity under stress. You've understood how confluence of time frames creates invisible gravitational pull. You've discovered how to build your own VWAP playbook, tailored to your strategy and psychology. And most importantly, you've started to evolve, from a trader who reacts to charts into one who interprets memory. But this video is just the beginning, because real mastery happens in action. Go back through your last 10 trades, apply what you learned, anchor VWAP to the major emotional moments, the fake-outs, the gaps, the pivots. Look at what the market was telling you that you didn't see. You'll be shocked how clear it all becomes when you know where to look. Then start building your AVWAP playbook, one chart at a time. Screenshot your zones, track your memory maps, build rules around your emotional triggers, turn insight into instinct. Leave a comment below. What was the biggest breakthrough you had in this video? Was it the story about memory alignment, the concept of VWAP as sonar, or maybe just realizing how much clarity you were missing? Your comment isn't just feedback. It's a signal to other traders that you're serious about growth, that you're building a deeper edge, and that you belong to a different league. And if you want more videos like this, real cinematic breakdowns of trading psychology, market structure, and emotional mastery, then hit subscribe. Because this isn't a channel, this is a movement, a new way of seeing. Remember this, tools don't make traders, anchors do. And the strongest anchor is not on the chart, it's in your mind. Now go trade with memory, trade with meaning, trade like you've already seen it unfold.